So we need now to compute the tax for the first employer and then the tax for the second employer. Now, if you look at our first employer, the information we have a basic salary of 26 million per year. We have a leave pay, a leave of 2.5 days leave per month worked or payment in lieu that accrues at a rate of 800 per month. He took a leave only in December. So it means that if he goes for leave, he's given 2.5 days a month for a leave. If he does not go for leave, then he's compensated for that money for not going for leave. And they told us he only went for leave in December. It means 11 months did not go for leave. So you need to be compensated for that leave pay. That is number 3. Number 4, was availed a company car for both official and private use. The car, Toyota Prado, was purchased at 80 million. The company gave him a fuel card of 2.5. So that one is a motor car benefit. Received 10 million to cater for half of his school fees. That is the money received. It's not a benefit, it's a cash. Is provided with the meals while on duty. Annually, the hospital spends 850 on his meals. That is a benefit in kind. Is given a housing allowance of 8.5 annually. That is a cash benefit. Is entitled to traveling allowance of 6.5 per annum. However, he did not travel during the year. So the question now is, did he receive this allowance or not? So that's what we needed to discuss. We have an overtime allowance and throughout the year is 80 million. Education allowance to help him purchase educational material of 800. So in this case, if you look at this question, automatically it tells you that you are computing annual employment income because all the information we have is annual. So automatically this tells you that you are going to compute annual employment income. Now, if you come down for the second, this is the second employment. He lectures, basic pay is this per weekend. Examination invigilation is this per year. Transport refund of that is that. Moderation examination is that. Advise Ganza on his employment income tax and tax payable for that period. Explain why some allowance and benefits were not included in ascertaining the tax under employment income. Explain the difference between contract of service and the contract for service. I think this one we talked about yesterday. So we are looking at part A, computation of the taxable employment income and tax payable. So let's move with this. So we start with the basic salary. First employer. Maybe let's look at this one. The first, we make it clear. We have the first employer who is Lifelink. Lifelink Hospital. Let's look at the first one. The first employer who is Lifelink Hospital. Now, we start with the basic salary. The basic salary is 26 500. Then we add other cash benefits. Other cash benefits. we can move on. So the other cash benefit, the first one, we have a leave pay of 11 months times 800. Times 800. Then number 4, this is a benefit in kind. If I'm doing an exam, then I can put a space like here. I say benefit in kind, such that I can be able to capture this car. I have the company car. I'm not going to calculate it because I've not yet got, so I can just say 10% times, I leave it like that because I've not yet got the total cash benefit. Then I leave it like that. When I get the total cash benefit, then I can come back and put the figure there. So then, so the value of the car and the fuel are irrelevant to the question because we calculate 10% of the car. Then received 10 million to cater for half school fees of the children. So we have the school fees for the children. The money was received by him, so it means it's an allowance. It's not a benefit in kind. If the company paid it to the school, then you would have considered it as a benefit in kind. But because the company gave him the money, in that case, you recognize it as you are going to recognize it as a cash benefit. So we have school fees for the children. For children, it is 10 million. Then is provided with meals while on duty. Annually, the hospital spends 850. So meals, this is a benefit in kind. I can put it here. It is 850. Then I go to is entitled to traveling allowance of 6 point. Now the question here did not traveling allowance on official duty, or if it is on official duty, that money will be exempted. But now the question is not very clear here whether it is a normal travel allowance, which makes it very bit challenging to understand in this case. Is entitled to traveling allowance of 6.5 per annum. However, he did not travel, so it means the money will be taxed in this case. If he traveled, the money would have used it. So if he did not travel and he received the money, in that case, the money will be taxed. I jumped to 7. Sorry, I jumped to 7. Is given a housing allowance of, so we have a housing allowance of how much? 8,510. 8,510. And then we have a travel allowance. Because he did not travel, the money is going to be, there is even okay, travel allowance. If he traveled for official duty and used the money for traveling on official duty, the money would be exempted. But since he did not travel, it means this money, and he received the money, in this case, the money is going to be taxed. This is 6.5. And then we have overtime. I can cut. So now when you are giving this space, you need to leave a big space. You see now how I'm fidgeting with it. Then I have number 9, which is overtime. Overtime, it is 80 million. Then number 10, education allowance to help him purchase education materials. That is still, it's an allowance he received. So it means it's going to be considered. We have education allowance. Education allowance of 800 per year. So the total here is going to be, I think these are the only items we have. The total will be this. This is the total cash benefit. Total cash benefits, or what we call the gross salary. Now I can now come here to my benefit here. I put 69 1110. So I will have this times 10%. I think I've covered all the information. So the taxable employment income will be taxable employment income is going to be 76. That one. Now from here I can now compute my tax, because now these two incomes are taxed differently. I cannot combine them. If they are taxed in the same way, I can combine. But since they are taxed differently, I can't combine these two incomes. I can't combine the second employment and I can't combine the second employment and the first employment, because second employment you're going to tax 30%, first employment you're going to tax in bands. So the tax liability, I can compute the tax liability here. So from here I will calculate from 0 to 360, because it is annual. That's why I was telling you the other day, it is 0%. Always look at the question. If the question is annual and for you compute, so this is going to be 0, and from 360 to 1.2, which are charged 20%, and here I will have 1.2 minus 360 times 20%. Then from 1.2 to 76, 871, the tax is going to be 30%. So I will have this minus 1.2, then times 30%. I put in commas. That is wrong. So the total tax is this. tax payable for the first employer. Now, a question may not tell you probably to calculate the pension, but automatically it is part of the contribution that employer has to give. So in that case, you need to contribute to the pension contribution. Our pension contribution, employer, I'm not going to separate. Employer will pay, it's going to be 76,871 minus our car benefit, which is 6,911, then times 5.3%. And this is going to be this minus this times 5.3%. And then I can also compute pension employee. Pension, I can write employee. It's going to be the same, 76,871 minus 6,911 times 3.3%. So I have this minus this times 3.3%. Now I can also compute my, I think, same HI, community health based CBHI, the community health based insurance, which is going to be 76,871 minus the pay, which is 22. 8. I need to compute the medical first. Wow. I need to compute the medical before computing the CBHI. The medical contribution for employee, I'm only going to compute it for the employee. Medical contribution is going to be, because we compute it on the basic salary, so I think pension was not required. My friend, don't underestimate Felix. Yes, it did not provide that you ask calculate pension, but the moment at this level you need to calculate pension, because that's part of the taxes to be paid to run the revenue. Medical contribution, we calculate it on the basic salary, which is 26,500. 26,500 times 7.5%. Because you cannot compute CBHI without having the medical contribution. So I have the basic salary times 7.5%. I think now I can compute my CBHI. It will be 76,871 minus pay, which is 22,869, 300 minus our pension, which is 2, 308, 680, minus the medical, which is 1, 987, 500, times 0.5%. So it's going to be this minus this minus this minus this, then multiply by 0.5%. So that is the total contributions that are going to be. So why do you deduct these figures? On what HP? When I'm computing the CBHI, I'm not getting the question well. Can you make it clear? Because CBHI you compute it on the net salary. That is the base. So that's why I have to reduce these figures to get the net salary. I don't know if I've answered you, HP. So that is the first part of the question. Not even finished. I think we also look at second employer. Tax of income from the second employment, or taxation of second employment. Taxation of the second employment. Second employment, we have the basic pay. The basic pay is 3 million, because that's 3 million per weekend. 3 million times 52 weekends. I think we get 3 million times the 52 weekends. It is 156. I hope there are 52 weekends in a year. Okay. Then if you look at this, they tell us it has an examination invigilation allowance of 1.5. Examination invigilation allowance. Examination invigilation allowance of 1.5. Then if you look again, there is a transport refund. Transport refund for invigilation of examination. That is a challenge now, because if this transport refund is from his home to work, that one is not an official duty, so it's going to be calculated, paid. But if it's coming from a different center to another center, in that case it can be exempted. So in this question, the question is a bit very open to mistake when you look at it. But transport refund, that is 1050, and the last one is it is a cash benefit is getting. He come to invigilate exam, and then is given allowance to invigilate, moderation of examination. moderation of examination. That is 500. So the taxable income will be, so that is the taxable income. Being a second employer, the tax is going to be, you are going to calculate tax at 30% because it's a second employer. So I'm getting this times 30%. Then I have the tax to be paid. Now you can compute the pension again, because for that. So that was the first part of the question that we were supposed to look at. Now, if you look at part B of the question, it says, explain to Ganza why some allowances and benefits were not included in ascertaining. No, there is, in fact, the question were not, for example, the benefit which are not included, the value of the car, and this one, the fuel card. I think that is the only benefit which was not included in our computation. Anything else we need to include? Invigilation is official duty. For example, you know, I don't know what you mean by that. Probably we are going to open the microphone and we discuss about it. For me, the way I'm looking at it, if, for example, I'm teaching at University of Kigali, if I come from home to come and invigilate an exam, should I be paid for that? The transport I've used? Because that is part of teaching, that's part of the work that you are supposed to do. But it would be different if you are coming from a different station to another station to come and invigilate an exam. That becomes different. Or if I come from Kigali to come and invigilate an exam in Musanze and I've been given transport, that is different because I'm not from home to work. I'm from a worker station to another worker station. That's where the challenge is in this question. As I said, it was a bit open. It wasn't clear more about that. So if you look at the other part B, the 4 marks, I'm not even seeing where to, because the only, what we have exempted, the value of the car and the fuel card are within the 10% value of the car and the fuel card are taxed within the 10% benefit for car. That's the only, for me, I'm seeing. I'm not seeing any other exemption that we have left out. And then the last one will be explain the 4 difference between the contract of service and the contract for service. I think this one is, we have looked at them in our yesterday class. You can check those difference between employment and self-employment. I think you can look at that, and that is the end of this question. So that is I think this question. I don't know if you have a question. Maybe I can open the microphone to hear your discussion on this question. The microphones are open, my friends. I want to hear your discussion on that question, whether we agree or we don't agree. Hello?
Hello, sir.
Yes.
I want to get more clarification on the transport refund.
Oh no, yes. On second employment?
Yes,
Uh,
transport refund.
mm.
I think this may be expenses of the institution where this guy is working.
Let's put it, you are also working. Do they refund you the transport if you go to work to go to work? Hello,
Hello.
I'm asking a question. If you go
Yes.
to work, do they
Yes.
refund you transport? Because every
No,
time
they don't.
you board and they go to work,
Yes.
do they refund your transport?
No, they don't refund.
No, they don't refund.
Yeah, that is part of the cost you are supposed to incur on the job.
Yes.
So if you are refunded the money, that is because in transport, if you look at the analysis of the transport, what is considered is from one worker station to another worker station. For example, I moved from University of Kigali in Kigali to come to teach in Musanze. I was
Yes.
given transport. Is it okay?
Yes. Yes.
In that case, they cannot tax that transport because it is the cost to travel from one station to another station.
Yes.
But if I come from my home to go and invigilate an exam in Kigali, of course I'm going to use the transport. The university cannot refund me transport because that is part of the job. Teaching is about also assessing.
Yes.
So that is how I've looked at it. Any other comment? Any other comment, friends? I want us to move from that. Can you go to another question?
Let's move on.
Okay. This is a question, I think we are answering now question number November. Twenty 2017. Question 4. Let's look at this one again. Mr. Brown is an expert in the mining sector. He obtained a job with Mass Mining Company Rwanda on 1st January 2016 as a mining supervisor under the following terms and conditions. He has an annual salary of 20 million, furnished accommodation and fuel car for private use. He has 2 children attending school. His employer provides an education allowance of 7.2 per annum paid to him in equal monthly installments. The allocation cost of 5.235 to enable him and his family to travel from Italy to Rwanda. Subsistence allowance of 1.2 per month. Obtained a medical reimbursement of 1.5. Then he said, while in Rwanda, Mr. Brown obtained an online teaching job from India where he's paid 12 million annually. So this is the second employment. This is the first employment. This is the second employment, still again. He also obtains 4.5 from the sale of his online journal in Rwanda annually. Then part A, we are supposed to compute Mr. Brown's chargeable income and tax payable for the year ended this, including the amount payable to National Security Board. Yeah, this I think they give few marks and the question is big. So we can still do uh, the same approach that we have used, the computation. Of taxable employment income. So we start with our basic salary, and they have told us the basic salary is 20M. It is annual. Please always look at that information because it is very, very important in answering the question. Whether you are computing, so we have a furnished accommodation and fuel, that's a benefit in kind. I can leave a space, then I put here, add benefits in kind. And I have a company car, a company house, which I will calculate at 20%. 20% times. I have not yet got that. I also have a company car, which I will calculate at 10% times. I need that information. Okay, then I can come back. Information number 3. He has 2 children attending school. His employer provides education allowance. So we have education allowance. It's then we add the cash benefits. Add other cash benefits. So the first cash benefit I have is the education allowance. Education allowance is 7.2. Then I have number 4. We have a relocation cost from Italy to Rwanda. Relocation. Relocation cost, which is 5,235. I think you remember what we discussed. We said anything you receive as a result of present, current, or future employment, it is taxed. So relocation, it's a benefit because of the future employment. So it is added. Then I have subsistence allowance. Subsistence allowance, which is 1.2 times 12 because we are calculating for annual. Another one we have is a reimbursement of medical expense. Which is 1.5. So my friends, if you are adding this benefit, you want to move a bit fast, it's better you leave a big space, which is not going to disturb you canceling. So our total cash benefits, I think these are the total cash benefits we have. Total cash benefits. Then from here I can add my benefit in kind. So I've already have 248, 335. 10% times and here it will be 10% times so if you look at that, the question I think medical reimbursement, is it taxed? Why? These are reimbursement of private expense because you get sick, you treat yourself, then the company reimburse you the money. That is reimbursement of a private expense. It's not a contribution to medical provider. What is exempted is the contribution, but reimbursement of medical expense, those ones are private. They are not, they are taxed. I mean, if I've answered you. So our taxable income, taxable employment income, this is the taxable employment income. Now, if you look at our question, we have been told that he also obtained 4.5 from the sale of his online journal in Rwanda annually. This is the business he's getting. And because the taxation of this and unemployment income is the same, this income can be added to employment income and calculate one tax. Maybe the only challenge you will have, the only challenge that you may have is on the calculation, because this business income does not pay for pension. That's where the challenge may have, because here you're supposed to calculate the pension contribution. But because this income is taxed under personal income tax, and here the annual income is also under personal income tax, so in that case, you can add the income and calculate one tax. I don't know if you are getting me in that aspect. So in that case, we can add other incomes, where you have sale of online journal. Yeah, okay. Yes, because it may discover when you are calculating the pension. Okay, let's leave it, since it may, but if there is no calculation of pension, you can calculate it the same way. But since we have to calculate pension, let's separate it. So in this case, we are going to have our tax liability. Our tax liability will be from 0 to 360 because it is annual. You are going to charge 0%, and the tax will be 0. 360 and 1 to 1.2. You have 20%. So here I will have 1.2 minus 360 times 20%. Then from 1.2 to 62, 835. We charge 30%. So it's going to be this minus 1 to times 30%. So this will be the tax payable on the employment income. Now I can now compute the pension contribution. Pension contribution. So I have the employer. The employer is going to be 62, 835, 500 minus our transport allowance is 48335. 4883 500 then times 5.3. So this is going to be this is I'll have this minus our transport allowance is this then times 5.3%. So that is the contribution by the employer. Then I can have the contribution by employee. Contribution by employee, which is going to be almost the same figure. I can remove this. I have 62, 835, 500 minus 4883, 500, then times 3.3%. So I will have the same this minus this times 3.3%. So I can still now compute the medical contribution. If you am to compute the CBHI medical contribution, because we are computing it on the basic salary, our basic salary is 20. It's 20M times 7.5%. So I will have this times 7.5%. So I can now compute my CBHI, which will be 62, 835, 500 minus the payee. Our payee is 18, 658, 650 minus the pension, which is 1,914,066 minus the medical, which is 15. Computing this is to be able to get the net salary times 0.5%. So I have this minus this minus this minus this times 0.5%. So those are the contribution to the medical that you may need to compute as per the question. Then We have also income from business, because it is selling an online journal. Business income. Our business income is is 4.5? 4.5. So you can apply the same bands, but now it's going to be a bit challenging in this because he has already got this band from 0 to 360. Apply 0%. So you're going to have 0. Then from that's why this income you could as well, if there was no, we are not supposed to compute the pension, this income we would add it to the employment income and calculate one tax, because the taxation is the same if it is annual. So you would have got the same. But now since we are supposed to compute the pension, then we had to differentiate this. So 360 and 1 to 1.2. You're going to use 20%, and then 1.2 to 4.5. That is 30%. So this is 168, and here we can compute this minus 1.2 times 30%. For tax planning purpose, it is beneficial, but it may not be allowed in, and that is tax payable. Then income from second employment. No sales of journal, no VAT on the sales. Now in this case, we may not, because we don't know. Is not the one calculating the VAT, unless if it was told us that this figure is VAT inclusive. If we were told that it is VAT inclusive, we would have adjusted. But in this case, we cannot compute the VAT on these sales because we don't know that it is VAT registered or not. Income from second employment, income from online job. Online job, and we are taxing it from as second employment. Second employment. So amount you see, or the salary was, I think, 12 million, and the tax is 30%. Because it is second employment, so you are getting this times 30%. So this one you can also compute the pension, because the employer will have to withhold the pension for this. CBHI, those deductions come again. Where? On what? I'm not getting the question. Make it clear. Last part, okay. Here, because we want to get the net salary, because we compute CBHI on the net salary. So to be able to get the net salary, you'll have your gross income minus payee, minus the pension of the employee, minus the medical of the employee. Then you get the net salary. Then after getting the net salary, multiply by 0.5. That's what we have done on that part. I don't know if it is okay. Cedric, I think Cedric, you are the one who asked that question. Have you got it? Cedric. Yes, Cedric. We are saying you want to get information on how we computed the CBHI, and I'm saying when we are calculating the CBHI, the tax base is the net salary. That's the tax base to compute the CBHI. And how are you going to get the tax base? You will get the total gross income minus the payee or the employment tax, minus the contribution to medical, minus the contribution to pension. Then you get the net salary. So after getting the net salary, multiply by 0.5 to get the CBHI. So that is, I don't know if you have got it this time. Now, another part of the question, those contribution, how to compute this? Are the one paid? Yes. By employees. Yes, Mr. Cedric. And that's what gives us the net salary you have got. Because you get the gross salary minus what you have paid to get the net. So the last part of the question on this part is part B. Part B says, assume that Mr. Brown did not relocate to Rwanda in order to provide the mine services, but only came to Rwanda for a total of 105 days in the year and earned 20 million as his salaries from MMC and did not earn any other allowances and benefit. The company only paid his accommodation cost of hotel in Kigali. However, he was able to conduct his online teaching and to sell his online journal while in the country. Advise Mr. Brown of his tax obligation on the income earned while in Rwanda. Now, if you look at this question, if you look at part B of the question, it is that Mr. Brown did not reallocate, and the days he has stayed in the country are 105, meaning Mr. Brown is not a resident. And since he's not a resident, you are only taxing him the income earned in Rwanda. I don't know if you are getting the logic on that part. If you look at part B, you can say that since Mr. Brown has only stayed for 105 days, he is not a resident in Rwanda, and therefore will be only taxed on the income earned in Rwanda. I think that's what I can summarize on that part. Since he has only stayed for 105 days, automatically Mr. Brown is not a resident. So since he's not a resident, you are only going to tax him on the income that he has generated in Rwanda. No, I've not calculated it. I said you calculate it. On the second employment, you calculate the pension. On second employment, you calculate the pension. Why are we using 5.3 for employer contribution to pension instead of 5? Because there is a maternity of 0.3, which makes it 5.3 the total. Because when you are computing, as we saw in our class, you have the pension of 3, you have occupational hazard of 2, you have the maternity of 0.3, a total comes to 5.3. I think I've answered you, Joseph. Solange, I said for second employment, we calculate pension. So you should calculate the pension. I've not calculated, but you should calculate the pension on second employment. Because on second employment, the second employer contributes. Yeah, that is it. I think another question is, I think it is from Joseph again. Come again, please. On what Isaiah? I'm not getting what you are saying. Come again on what? Isaiah, make it clear. On part B, I think that is what I've summarized here. That Mr. Brown has only stayed in Rwanda for 105 days. So in that case, Mr. Isaiah is not a resident in Rwanda. And since he's not a resident in Rwanda, he will only be taxed on the income he generates in Rwanda. So what income does he generate in Rwanda? That's what we are going to look at. The income that he is generating in Rwanda. So we can look at that. The income he generates in Rwanda. So he's going to be earning the 20 million, the basic salary of 20 million, the basic salary of 20 million. Now, if you look at this one, the information a bit confuses here. They said the company only paid his accommodation cost of hotel. Now we are not told about the accommodation cost of hotel, so we are not going to consider that. And the only income, we also have sale of online journal in Rwanda, of online journal in Rwanda, which is 4.5. So his taxable income will be then the tax will be at 15%. So that is how Mr. Brown will be taxed on this income. The other income where is teaching online is not earning it in Rwanda. So we cannot tax it in Rwanda. But the journal is sold in Rwanda, therefore that journal will be taxed in Rwanda because he's selling it in Rwanda. But teaching online is not earning the income in Rwanda since he's not a resident in Rwanda. What's the difference of resident and non-resident person? I think HP, that is what we discussed. That is, I'm having a class. That is what I discussed in the previous part. I think yesterday, resident, we saw the condition of a residence and the condition of a non-resident. I talked about that one you can refer to what we discussed in the previous part. What are the conditions of a resident person? I think it was a bit clear yesterday. You can check the class discussion of yesterday for that part. Explain the meaning of foreign tax credit. I did not talk about it, but maybe I can answer it and I will not teach it again. Part C, we talk about a foreign tax credit. Now, when we take a foreign tax credit, remember the other day when we were discussing a resident, one of the implications in the taxation of a residence, we said that if a resident earns an income outside, a resident individual is taxed on the income generated within and the income generated outside. Now, remember that the income generated outside is already taxed outside. So the foreign tax credit is that if a Rwandan taxpayer earns an income outside and that income is already taxed, so that taxpayer will be given or will be allowed to reduce the tax which has already been paid outside. That's the foreign tax credit. So a Rwandan resident who earns an income from outside is allowed to reduce the tax paid outside on the same income or on the income. However, a foreign tax now, that's what we mean in a foreign tax credit. If he's a Rwandan resident and a Rwandan resident has generated income outside, you find that income is already taxed outside. So the Rwandan resident is allowed to reduce the tax paid outside on the tax payable or on the tax liability. But when you are reducing, the rule is that a foreign tax cannot exceed a local tax. Where a foreign tax exceeds the local tax, then a credit should be given using a local tax. We shall discuss it more when we are discussing taxation of cross-border activities. We shall discuss about this rule again in that chapter, but that is a brief that I can talk about it. The last part of the question is explain the circumstances under which the taxpayer who is an employee and is paying taxes under the pay-as-you-earn may be subject to penalties and fines. So the fines and the penalties under pay system, fines and the penalties under the pay system. So we can look at the fines and penalties under the pay system. So declaring, number one, you can talk about declaring the tax rate, declaration of tax rate. So you have said that income earned by others just withhold 50%. I think that's what I've calculated. Yes, I think I've calculated 15%. So I think that is what I've just talked about. We have paid it at 15%. That's the tax we've calculated. I don't know if I've used, yes, 15%. Paying the tax rate failure to withhold the tax, failure to withhold tax, failure to maintain the payroll, the payroll, failure to maintain the payroll. So these are some of the penalties which are under the pay system. If you declare the tax rate, you pay the tax rate. If you don't make a withhold, you pay someone and you don't withhold. If you don't maintain the payroll, or you don't, because the payroll provides a detailed information about the employees. So if you don't provide those detailed information about the employees, it is also a penalty. So that was the question. I think I can open the microphone for a few minutes for your contribution before we go to another question. So the microphone is open.
Hello?
Yes, please.
On sub-question B.
On subsection B, yes.
Where it said that she is accommodation in hotels. I think on this question is to use the 20% for accommodation.
You know, those are two different things, because the 20% is calculated if the company provides a house. Can we call that one as a company house, the hotel?
No.
That's the challenge we are having in that part. We are not given the accommodation, the amount the company is paying as accommodation. And if it is a non-resident, that money is spent, he spends it on, is not getting any benefit. He's spending it on the job because he's not a resident.
Yes.
Yeah.
Thanks.
Any other question? Any other question?
This question.
Yes, Cedric.
Here on the accommodation, you have said that when the company provide the accommodation to its employee, you don't calculate the 20% benefit.
Get me correct. When we are discussing the accommodation yesterday, accommodation benefit, the law recognizes two types of accommodation. It is either a company house where you calculate 20%, or the company is renting a house. If the company is renting a house, that money is going to be added to your accommodation. But in this case, the company is renting a room, which should be maybe considered as a house, but we are not given the amount the company is renting. Should we calculate 20%? That is my worry in this part.
That amount they are paying as a rent.
Yeah, which one? We are not given that. Can we say that they are paying it?
I'm just assuming when we are having the amount that the company are paying. Is the benefit in kind or it's an allowance?
If the company is renting,
yes,
it's an allowance.
Not benefit in kind.
No, it's an allowance.
Okay, thank you.
But for this expatriate, it is very common. They bring them, the company which brings them, they rent an accommodation. Because someone is outside, they rent them an accommodation, a hotel, and the hotel is just to make them stay to do the job, which is not going to be a benefit they are enjoying in that. Unless if he's a resident, that one will be a benefit. Any other question, or we can move on to another question, which is the last one. Hello? Any other question, or we move on? Please be active. You are quiet. I don't know what to say.
We can move on.
Yeah, please be active.
Yeah.
Move on.
I think now we go to question number 3. I don't know if I can bring it a bit down, because let me bring it a bit down here, probably. I can bring again here. So let's look at question number 3, which is going to be our last example, not the least, because we shall meet again and discuss these things, maybe face to face. Our next class, I know it will be face to face. Miss Jiramata is a professional lawyer who has worked in the public and the private sector for the last 10 years. She was recently offered a job by Caritas International, a local NGO registered in Kigali, and given an opportunity to choose between working as a full-time lawyer or as a consultant. The details of the contract are under the two operation options for the year end are as follows. So contract one is working as a full-time lawyer, and that's the thing. Working as a full-time lawyer, it means you are going to compute the employment income. If he's working as a consultant, still the computation is this, because if you're working as a consultant, that is a business income. It's not a second employment. Maybe probably we need to analyze that aspect. Is working as a consultant as a second employment, or but it's not? If you are asking working as a consultant, automatically it's still going to be it is going to be a business income, not an employment income. So if we look at that, then we can that is so answer to question 4, 2018 June. So the first aspect is for him to work as a full-time, working as a full-time lawyer. So working as a full-time lawyer, it means you are computing employment income. Working as a full-time lawyer, in that case, you are going to compute employment income. So it will be taxable employment income. So what we will have, our basic salary, which is 30 million per year. Please always look at the question before answering and identify whether you are answering the question is per year or per month, most especially employment, because employment, as we saw yesterday, it has these two parts. It is 30. Then we add other cash benefits. Other cash benefits. So other cash benefits, we have a subsistence allowance, which is also 80 million per year. Then I have a leave pay, which is 10% of basic salary, which is 30 million. A leave pay is this times 10%. Then another information is a housing allowance, which is a 6 million. Then motor vehicle, this is a benefit. I can leave a space here and say add benefits in kind. I don't add until I finish calculating all my cash benefits. I have a company car. which will be 10% times, I need to first get this data. Meals and refreshment, I don't know whether he's receiving this money or is the company is getting it, and you're going to put it into meals and refreshment. That is not very clear whether he receives it cash. If he receives it cash, it is a cash benefit. But if he receives it, if the company pays for meals and refreshment, then it becomes a benefit in kind. So it is a bit challenging here. It is very easy to fail this part. Overtime allowance. Overtime. That is a cash benefit, 1.8. Then she will be required to work 5 times a week for 8 hours a day. That is not so much. So the total cash benefits, this is our total cash benefits. Now I want you to make a comment on this leave, on this meals and refreshment. Is it receiving cash? Oh, that's all the company pays for meals and refreshment. That is a challenging part. What is your comment on this part? The meals and the refreshment. Is it receiving cash? Or the
Maybe,
company?
maybe we can include it because,
As a cash benefit?
yeah, yes.
Is it receiving it cash? Or the company pays for meals and
Meals and
refreshment?
refreshment. Yeah,
The
maybe
company
it's
pays on
very-
his behalf.
Yes.
The
Yeah.
company pays on his behalf.
Yes.
Yeah.
So we are taking it to benefit in kind.
In kind, yeah.
Okay. So we can now compute the car, which is 48,800. So our taxable employment income, I'm going to have this. So I think then you can compute the tax now. Our tax liability from 0 to 360, because it is annual. Always look at that. This is 0, and from 360 to 1.2. That is 20%. Even if I say 168, because I've been calculating this one. Then from 1.2 to 54,680, you want to calculate 30%. So this minus 1.2 times tax payable. So you can, I'm not going to compute because now you are used to these ones. Someone is asking, overtime they didn't specify whether it is annual. Overtime allowance, but we cannot specify that because most of the figures they are giving us annual. We cannot specify that this one is per month. So because we need to make a decision, this is the tax payable. I want you now to compute this, compute the pension contributions, because you have looked at them. I think now you can be able to compute them, the pension contributions, and from there you can get the net salary. That way you are going to have your, because when you are making a tax planning question, because it's like a tax planning question, you look at it into two. Look at it, because the most one is to look at the tax, then you also look at the net salary. You can compute the pension contribution and then you get the net salary. Please, I know you will be able to compute these pension contributions because you have looked at more examples on that. Now, that is option number 1. Option 2 is to work as a consultant. Option 2, to work as a consultant. So if he works as a consultant, it is a business income. It's no longer an employment. You cannot take it. You cannot take it as the way they are taking it. They are calling it that's consultancy fees. Consultancy fee. Consultancy fees is 48 million. Please, on a housing, Cedric, I think you have asked this one. This is the second time. In the previous law, I want to make it clear, before the law of 2018, if the employer rent a house, we were considering, if the employer was paying direct to the landlord, we were considering it as a benefit in kind. But in the law of 2018, the law has made it very clear that if an employer is renting a house or renting a car, it is considered like any other allowance. You don't consider it as a benefit in kind. You consider it as any other allowance an employee is receiving. I think I've made it clear, Cedric. Then we have transport reimbursement. Which is 3 million. So our taxable income so being a business income, you are computing the personal income tax, our PITs, our personal income tax. It's going to be Daria. How do you go to calculate the net salary? That is what you have looked at. You have to get you first calculate the pension, you calculate the medical, you calculate the pay. Pay we have already calculated. So what is missing here is pension and the medical, and then you get the net salary. our PIT is from 0 to 360. This is 0%. Here we're going to have 0. Then 360 to 1.2. That is 20%. This is 168. And 1.2 to 51 is 30%. So here you're going to pay 15 million. So this will be the tax payable. Now this one, that you don't calculate pension on a business income. We don't calculate pension. It means his disposable income. The disposable income so it's going to be this minus this. So that will be the disposable income available. Now, our decision is going to be based on this, because this will be the disposable income here, and this is the disposable income, and the tax here, and the tax here. So if you look at this, basing on the tax, because we are supposed to make a device, why do we consider reimbursement as an income? Because he was reimbursed that money. He incurred transport, it is part of the money, the fees he received it. That's why we are considering it as an income. He used his money for transport, and the company reimbursed him that money. So it is part of the money he received. Consultants, you are not given a transport if it is a consultants. So our decision, when we are making a decision, we compare tax and we compare the disposable income. So basing on the tax, this one is called who? It's called Miss Giramata. Basing on tax, Miss Giramata saves or minimizes tax liability. Minimizes tax liability when she works as a consultant, and will save a tax of how much? Will save a tax of it is going to be 16 1212 16 212 minus 15 108. which is going to be that is the tax he's going to save if he works as a consultant. Now, alternatively, you make a decision if he works as basing on the disposable income, which I think you'll have to calculate in that case. We all know that consultant service, we all know that consultant service pay 15% if he is not registered, or 18% and 3% when he is a registered person. Please, members, the 15% on that consultants, I think it is Isaac. Isaac, the 15% that you
Yes, sir, it is me.
the 15% you withhold, that is a withholding tax. It's not a final tax. That is withholding. You withhold 15%. And when he computes the business income, you will reduce that withholding that he has already paid. It's not the final tax, but you withhold 15%. I don't know if I've answered you on that, on your question, Isaac.
Okay, so I'm answered it.
Yes. So the 15% you withhold if he's registered or not, that is a withholding tax. And the 3% you are withholding, but that's not the final tax. Reimbursement and expense is just a cash receipt, but not an income. I don't know, Joseph. It is a cash receipt. I don't know how I can explain that, but when you, how much did he, because he was given the 48 million, but he was also reimbursed, the company reimbursed him 3 million for his transport expense, meaning the total the company gave him is how much? The total money the company gave him is the 48 plus the 3 million. I don't know if I've answered you. I don't get how this is a tax planning question. It is a tax planning question because you are supposed to compare and give an advice. You are supposed to compare and advise him whether he should work as a consultant or work as a full-time. And your advice is going to depend on where he minimizes the tax or where he maximizes the disposable income. That's why we classify it as a tax planning question.
Excuse me, sir.
Yes, please.
My question is about transport reimbursement.
Yes, please.
Suppose that an employee uses his or her cash for business purpose, and the employer reimburses that cash because he has already used their cash. That one should be taxed.
That one is exempted.
Then what's the difference between that exemption and this one?
This is a consultant. A consultant, you are not given transport.
Okay, thank you. Understood.
Yes, yes. How have we got the disposable income, Fiona? What I've got is to get the taxable income minus the tax paid. Then I got this disposable income. This is the total income minus the tax to be paid, because this one is a business. We don't have pension. We don't calculate pension. So you will be the total income minus the tax, then you are going to remain with the disposable income. Pastor Claude, I said here, because you need to compute the pension contributions. you'll have employee contribution, employee pension, and you have medical contribution. So medical contribution, then you also have the CBHI. In that case, you get the net salary. We have looked at this one in our previous example. I think you can now compute these things based on what we have discussed in the examples above.
Okay.
Okay, someone is asking for a break. Okay, let's have a break of, I think we have finished this part. I don't know if there's a part remaining. Let me see if there's any part. Maybe we can finish this part and then we'll go for a break. Then after that, we can come back and start another thing. Advice International, their tax regarding the income paid to Jiramata. So the tax obligation of Caritas is to withhold, to declare, and to pay tax. Those are the tax, and to maintain the register or the payroll. Those are the obligations of Caritas International. That is the last part, obligations of Caritas International. Number one is to withhold. It must withhold tax. Withhold tax. It must declare the tax. Declare the tax in required time, of course. It must pay. The tax, and then maintain the payroll. So I think that is the discussion on employment income that we discussed yesterday. And as you have said, we can have a break of how many minutes?
5 minutes.
Okay, let's have a break. Okay, maximum 10 minutes. When you come, then we can check the I can hear your questions, or I can make a recap, and then we go to another part. Okay, let's have a break.
afite ngo symptoms za kanseri ngo
ubwo
asanga
ngubwo ubundi bitwakira kanseri baragatira kanseri
symptoms za kanseri nyine yari azifite ariko abo ntayo bari kubona
hano sinabona hano rero hano n'ibyanze niho twagera mu bindi bakamenya kanseri n'imyizere kandi kayisanga barabuze kanombe barabuze
nk'ubu zitangiye noneho kwambara ikikinda ndangamuco kubera ko iyo ufashe mu gitsina ntumenyereye
ahubwo wowe muzi kuko ufite kwa muganga neza wasa harya ugafite irandevu wangiye uzagenda wandikisha kwizama ari inama cyo mu mashini
iyo nkuriye gusaba ikintu kamera neza ko gafashemo niba ngara nambaye
weya uzajya kwa muganga
kantereye nko mu kwa kangazi ikinira nabi ntabwo biragaza yakira isima amahoro gato ubu ngubu umeze neza
ubikora ariko uzajya kicuruza kujya ubikora
I'm sorry that I was talking when I'm muted. I did not check. So we are talking about taxation of business profit. And I want to emphasize this in the taxation of business profit, that one of the chapter that determine your passing or failure is business profit. If you are to pass or fail, your passing is going to depend on this chapter, business profit. And it is one of the most challenging part in taxation. The taxation of business profit is the most complicated because it has got a lot of things that you need to master. Once you master this business profit, you have high chances of succeeding in this paper, high chances. And I also want to emphasize this, that the taxation of business profit is the same for all businesses. Whether you are taxing individual business, you are taxing companies, you are taxing cooperatives, you are taxing partnerships, you are taxing banks, you are taxing insurance companies, the logic of calculating tax is the same. What is most important is to know what is allowed and what is not allowed. That's the most important thing as far as taxation of business profit is concerned. And I've introduced the definition. What do you mean by business profit? Business profit, it is income from all business activities less the business expenses. And I was pointing out that when we say income from all business activity, we mean every income that is from the operation of the business, you are going to consider it in your taxation, as long as that income originates from the business activities. And then we less the business expenses. That is also very important in definition. What we consider are those expenses for the business. But when we are computing business profit, we also include the proceeds from the disposal of a business asset. When you sell a business asset, the gain from the sale of a business asset is also included in the computation of business profit. So that is very, very important in the computation. So some of the things I need to talk about: assets held in foreign currency. Assets held in foreign currency. So if an entity or if a firm has got some assets which are in foreign currency, the difference in the fair value of the asset at the beginning and the fair value of the asset at the end is recognized in the computation of business profit. We are saying if an entity has some assets held in the foreign currency, the difference in the fair value of assets as a result of changes in foreign exchange is included in the computation So what we are looking at here is that if, for example, a business has got some assets which are held in foreign currency, of course, the currency at the beginning and the currency at the end of the year may be different. So you either have a profit or loss on the translation. So that difference in the fair value as a result of the difference in the exchange at the beginning and the exchange at the end is considered in the computation of business profit. So when you are computing, you'll have the value of the asset at the beginning. So value of asset at the end, and with this value of asset at the beginning, value of assets at the beginning. In that case, you're going to have so that difference can either be a gain or it's going to maybe a loss. So that difference, you are going to consider it when you are computing the business profit. So look at the value of the asset at the beginning and the value of the asset at the end. Then as a result of the foreign exchange, then that difference is considered in the computation. Maybe company X, I can look at a simple example. Company X has a euro bond valued at 20,000 USD.
Excuse me.
Yes.
I have some concerns.
Yes, please.
Yes. We see that the taxation of business profits is based on a finance statement of income statement where based on the what the business has been earned. So the finance statement has presented into the foreign into the local currencies. So what's the finance statement? What the company held an asset that has in foreign currencies and and translate those currencies into local currencies where the finance statement has been presented. So what is the impact? Why do we consider the asset held in foreign currencies while the finance statement has presented into local currencies where the profits is the one, the taxation on business profits is based on the profits determined in local currencies. Give us on those concerns and Ringo need the taxation of business profits where the asset held on foreign currencies.
That's what we are saying. Not all your asset may be held in foreign currency, but you may find that on your balance sheet or in your records, you have some assets which are in foreign currency. And as you are saying, you are going to translate them into the reporting currency or into the functioning currency. So when you are translating those assets into the functioning currency, you are going to look at what was the value, the foreign currency at the beginning of the year, and what was the foreign currency at the end of the year. That's what we are looking at. You translate, for you, maybe you're going to translate using your IS-21. That's what you are going to do. You are going to translate as per IS-21. But for the tax purpose, we are also interested to look at if you have some assets which are in a foreign currency, what was the foreign currency at the beginning and what is the foreign currency at the end, such that we either compute a gain or loss on that particular currency, although you have made a translation as per IS-21.
So the transaction made every year, or it means once at the acquisition of
Every
an
year,
asset.
as
when
long
you are-
as long as you still have those assets in foreign currency, every year you have to assess.
So hard.
Eh?
Can I intervene?
Yes, sir.
Yes.
Yes, this occur whenever we have a purchase from abroad or sell in to foreign current countries. By the time maybe let's say you purchase from abroad a given raw material, at that time when you receive invoice, you need to translate and put in your books of account. Then if the times of payment arrive, you need and again to assess and translate. Maybe the exchange rate has changed, especially the USD, which is being used for international transactions. Or if the payment transaction does not occur within the year, and at the end of the year, on 31st December, the IS 21 requires you to assess again whether there is a change in foreign exchange currency. Again, if you find a gain, you need to record in the books of account. If you find the loss compared to the beginning time, you assess, and whenever you find loss, you record that loss. Whenever you find a gain, you record that gain. Thank you.
Okay, thank you very much. I think it has been explained. So you need to make assessment. Let's say we have a bond valued at this with a maturity of 5 years. Let's say the exchange rate at the beginning of the year maybe is 1 USD equal to 1,010, and at the end of the year, one USD equal to 1030. So this is what you need to look at. This is a bond that is going to stay on your balance sheet for 5 years. So it means every year you will have to assess this value, looking at the exchange rate of this asset. So we are saying you will have the value of the asset at the end. What is the value? Of asset at the end? It's going to be 1030 times 20,000, which gives us 1030 times 20. Then I also look at the value at the beginning. Which is 1010 times 20. So the difference is what we're going to recognize as our gain. Hey, what have I done? Then this is going to be recognized as a gain or as an income. You recognize this one as an income when you are computing the business profit. That's what we are talking about in this case. Then we cannot talk about income from agriculture activities. Income from agriculture activities. So if a taxpayer is in agriculture activities, and agriculture activity means crop farming or crop production, forestry, fishing, poultry, that is what we refer to as agriculture activities. So if a taxpayer is in agriculture activities, annual turnover of 12 million is exempted from taxable profit. So agriculture activities include crop farming, fishing, fish farming, not fishing, fish farming, poultry, forestry, etc. So the annual turnover of 12 million is exempted from taxable business profit. So if a taxpayer is in this agriculture activities, as mentioned, the annual turnover of 12 million will be exempted. It's not going to be taxed as long as it belongs to these activities. Even livestock, I think I've not mentioned livestock. Even livestock is included here. Livestock. So the annual turnover of 12 million from agriculture activity is exempted from the taxable business profit. I think that one is also clear. Yeah, that is a tax policy, Fiona. So another thing that I want us to talk about is taxation of small, micro, and small businesses. Now, when it comes to taxation, we have got mainly 3 tax regimes. We have a flat tax regime, we have a lump sum tax regime, and we have a real tax regime. So in a flat tax regime, the taxpayer pay a flat tax. In a lump sum tax regime, the taxpayer pay basing on the turnover, a certain percentage of tax, but based on the turnover. In real tax, the tax is calculated on profit or on income. Now, when it comes to micro and small businesses, they follow under flat tax and lump sum tax. A micro business follows under a flat tax, but a small business follows under a lump sum tax. However, a small business, it can apply to change, to move from a lump sum to a real tax. So we are saying micro businesses are taxed under a flat tax. As below. So the calculation of the tax, it depends on the turnover. So you have the turnover here, annual turnover, and we have the tax. So from 2 million to 4 million, the tax is 60. Then from 4 million, 4 million and 1 to 7, the tax is 120. Then from 7 to 10, and the tax is 210. And from 10 to 12M, the tax is 300. So that is how we tax the micro businesses. This is what we call a flat tax regime. Then when you go to small businesses, small businesses are taxed under lump sum. Regime. That is 3% on the annual turnover. So what will be the flat tax of above 12 million? That is that one. If it is above 12 million, it's no longer micro. In that case, it is a small business. So the annual turnover for small business ranges from 12 million to 20 million. So the annual turnover, for as long as the annual turnover is above 12 million, that one is a small business. So in that case, you are going to calculate 3% of that turnover, and you calculate the tax. And we said smaller businesses have got an option to move from lump sum to arrear tax. So smaller businesses have an option to move from lump sum to real tax. So if it's a small business, it can apply to move from a lump sum tax to a real tax. What about from 20 to 20 and above? That one becomes a real tax regime. That one is a medium business. So you are going into a real tax. So that is how we tax the small and the micro business. Now we are now coming to an important aspect, which is allowable, or sometimes we say deductible, and non-allowable or non-deductible. Expenses. This is the heart. This is the heart of this chapter and the heart of business profit. Understanding what is allowed and what is not allowed. It is the heart of this chapter. If you can be able to understand what is allowed and what is not allowed, then in that case you can be able to pass this question, because almost 90% of this question, of the questions on this, they depend on this part: what is allowed, what is not allowed. That's what the examiner is interested in when he's asking this question or question on this part. Now, which expenses or deductible expenses? What expenses are allowed for tax? Deductible expenses. So we say that an expense, a business expense, an expense is allowed for tax if it meets the following conditions. An expense is going to be allowed for tax if that expense meets these conditions. Number one, it relates for the direct purpose of the business. Direct purpose of the business. What does it mean here? What it means is that the expense was incurred in the normal operations of the business activity. In that case, that expense is going to be allowed. If the expense was incurred in the normal operations of the business activities, that expense is allowed for tax. Number two, it relates, or they relate relates to the tax period. The expense is matched with the tax period. If it is 2022, the expenses were incurred in 2022. So in such case, that expense will be allowed for tax. Number 3, it has got supporting document. It has got supporting documents. Now, not even enough. Supporting documents generated from EBM. Generated from EBM. You may be having an invoice, but the invoice was not generated from EBM. That one is not allowed. For you to recognize an expense, that expense must have been generated from the EBM. You have an invoice, and the invoice was generated by EBM. In that case, that expense is going to be allowed. Otherwise, it may not. Number 4, it leads to a decrease in the asset value. For example, depreciation, impairment, bad debt, those expenses which leads to a decrease in the net asset value. Those ones are allowed for tax. But care should be taken on depreciation and bad debt. We shall discuss these ones in more details. Yes, Mans. Hello, Mans. The microphone is open.
So if there is supporting your document and there is no EPM, you don't do that.
That one is not allowed. As long as the invoice is not from EBM, that one is not allowed for tax.
Excuse me.
Yes.
Yeah. Once the expense is related for transport, why the transport does not generate the EBM invoice?
What do you mean there's no EBM invoice?
The transport, once the cost is related for transport.
But we all know that EBM does not mean that you pay VAT. You may not be paying VAT, but you have an EBM.
Yes.
What about these receipts they give? Are they not from these EBMs? If you go to board a vehicle from Kigali, from anywhere, they are giving you an invoice from EBM. They don't pay VAT, but they issue invoice.
Okay, let's move on.
Okay. Maybe motorcycle, I think. Motorcycle, they don't have that. So let's look at non-allowable expense, and that's going to be our end today. Non-allowable expenses. Please, any question on business profit, you fail it here or you pass it here. That's what I can say. Any question on business profit, you fail it by failing to identify the allowable and non-allowable, or you pass it by clearly identifying what is allowed and what is not allowed. So you need to master this part very, very well. Number one, dividends and the transfer to reserves. I think this one is any dividend paid out of profit and the transfer to reserve from the profit, that one is not allowed. Two, entertainment expense. Expenses except sports activity of the employees. So any entertainment expense is not allowed. That one is not, yes, that one, and any idiom invoice or expense is that if it was issued incurred in other countries, yeah, that one is okay. If it was from other countries, then it can be considered. But here it must be from EBM. So entertainment expenses, they are not allowed except if it is an entertainment expense for the sports activities of the employee. That one is allowed. But any other, whether you're entertaining clients, you're entertaining employees, you're entertaining suppliers, that one is not allowed, apart from sports. Accounting depreciation. We shall discuss this one again. Accounting depreciation. You know, we are going to discuss this one maybe probably when we meet again. When we are computing depreciation, we should use tax laws. So any depreciation that is not according to the tax law or computed according to the tax law, we recognize it as an accounting depreciation. So that accounting depreciation is not allowed for tax. Personal consumptions. Expenses for personal consumption, drawings, remove of goods from the shop, that one are not allowed for tax. Fines and the penalties. Any fine and a penalty, it is not allowed for tax. Income tax, and the recoverable VAT. The income tax is not an expense, so it's not allowed. Either it's a withholding, it's a what, that one is not an allowed expense. Recoverable VAT is the VAT a taxpayer can claim. That's what we call a recoverable VAT. As long as a taxpayer can claim that VAT, that VAT is not allowed. But if the VAT is irrecoverable, a taxpayer cannot claim it, in that case, that VAT is allowed. So we shall discuss what is recoverable and what is irrecoverable VAT when we are discussing VAT.
Sorry, sir.
Yes?
When VAT said VAT only. On the question, when he said VAT, without saying is recoverable or recoverable.
Then you need to understand the transaction. If it is VAT only, then you are going to assume that that VAT is recoverable.
Okay.
Number 7, donation to a charitable organization which exceeds 1% of the turnover. Any donation that is made to a charitable organization that is exceeding 1% of the turnover, that one is not allowed. And I want to make it very clear here. If a donation is made to a non-charitable organization, the whole donation is not allowed. You don't need to calculate 1%. You only calculate 1% if the donation is made to a charitable organization. I can give a simple illustration here to know how to calculate this donation. Let's say our turnover is 40 million, and the entity made a donation to charity. A donation to charity is 2 million. That's what you have. That our annual turnover is 40, but the entity made a donation to charity of 2 million. So when we are adjusting, we shall have a working one or working number what? Then we say donation. Then we shall have amount donated, which is 2 million. Then you look at the donation allowed. Donation allowed, we said it should be 1% times the 40 million. So I will have here 1% times 40 million. I have, how much is this? So in this case, it means the 400 donation is allowed. Any excess between what was donated and what is allowed will not be allowed. So donation not allowed will be this minus this. Then I get donation not allowed. Not allowed. So that's how I will adjust. I look at what was donated, look at what is allowed, then I determine what is not allowed in this case. Number 8 is capital expenditure. So any expenditure for acquisition of a non-current asset is not allowed. Any expenditure to buy an asset is not an allowed expense. Number 9, we have 20% of expenses which cannot be separated. Private from business. If you cannot separate an expense, private from business, 20% of that expense is not allowed. Example, communication, fuel for directors, those expenses that are very hard to separate. But when you are answering, it is very important to look at the question to specify, because sometimes a question can be silent. Maybe communication, and is silent on whether there is a system to separate or no system to separate. So in that case, you may make a note when you are answering that part. But as long as you cannot separate the expense from private and business, so in that case, 20% of that expense is not allowed. Another is interest on loan from a related party which exceeds 4 times the equity. Interest on loan from a related party which exceeds 4 times the equity. So if you have, because when you say related party, we mean one entity controls directly or indirectly another entity, or it can even be individuals controlling directly or indirectly another individual. Those one we classify them as related party. Now, when you are dealing with the related, this one, any loan from a related party that exceeds 4 times the equity, that difference is not allowed. This is very important to analyze, because it's what's called thin capitalization. This is what we refer to the thin capitalization. Thin capitalization, it is when the loan exceeds 4 times the equity capital. So that's what called, if you have a thin capitalization, that is when the loan is exceeding 4 times the equity capital. You are having what called a thin capitalization. And when you have a thin capitalization, that excess is not allowed. And when you talk of equity, we mean, when we talk of equity, we mean fully issued and paid up share capital. Issued and paid up share capital. We don't include other components of equity. We only looked at what was fully issued and paid up share capital. That's what we only consider when we are computing the thin capitalization. Yeah, you can consider it as allowable. If the question is silent about communication, you can consider it as an allowable expense. I want to look at this one. Let's say company X is a subsidiary of company Y. And we said during the year, company X, company Y gave a loan of maybe 200 million to company X at an interest rate of 10% and fully paid up share capital X is 40 million. So if you look at this one, the loan, if you look at the loan is for 200 million. The loan is 200 million. And our equity is 40. So automatically, if you look at this one, the loan is how many times? The number of times. It is, you'll find that the loan is 5 times the equity capital. If you look at the proportion of loan to equity is 5 times the equity. I think I can use that one. Proportion of loan is 5 times. So it means that this one is automatically a thin capitalization because the loan is 5 times more than the equity. You are having a thin capitalization. So when you need now to make adjustment on this interest, because we are saying that 4 times is allowed. Any excess of 4 times is not allowed. So you can now, when you are working, maybe number 2, you'll have working in number 2 is interest or finance cost, depending on that the question is. So you'll have interest paid on the loan, 100 million times the 10% interest rate is times 10. That's what is allowed. Interest allowed will be the 40 million equity times 4, because our loan should be 4 times our equity, then times 10%. I think I'll get 160. I'll get 160 times 10%. Million. Any excess will not be allowed. So you'll have to add it back when you are adjusting. So this one is not allowed. So that is how you're going to adjust your thin capitalization. I don't know if you have a question on that. So this is one of the challenging parts that students usually face. Any question on how to adjust the thin capitalization? My friends, I don't know why you keep quiet when I ask a question. Are we moving together or I've already left you?
Yes, we are following.
Together.
Oh,
We are together, sir.
but when I ask a question, you should give comments.
We normally mute.
It is understandable.
Okay. Okay. So that is how we adjust for. That's how we adjust for this thin capitalization in our question. So the last one that I want us to talk about as an expense, and it's going to be our last part of the discussion today, is that is number 11, I think. That is management fees, management, royalty, or professional fees paid to a non-resident. Which exceeds 2%. Now, the important aspect here is this word, paid to a non-resident. That's the most important aspect in this definition. If it is a management fee, a professional fee, a royalty fee, paid to a non-resident, which exceeds 2% of the turnover, the excess is not allowed. Let's say if you are adjusting this, if our turnover, assume that, and the company made maybe of 5 million to a non-resident. That's the important part. If it is paid to a resident, it has no problem. But the important aspect, if it is paid to a non-resident. So when we are adjusting this part, we shall make a working, maybe working 3, we call it management fees. And here, paid, how much was paid to, then say amount allowed. Amount allowed is, it should be 2% times our turnover, which is 100 million. I get this times 2%. So it means the 2 million is allowed. Any excess of this is not allowed. So you get this minus that. This one will not be allowed when you are computing. So that is how we make adjustment for these payments. When sales includes VAT, how can we adjust for management fees? You calculate on exclusive figure, because when we are computing for profit, we calculate on exclusive, not inclusive. Also talk about remuneration and sitting allowances. Sitting allowances, those are allowed. If it's a sitting allowance for director, it is allowed. Remuneration, it's allowed, but the only thing that's not meant to be allowed are the cash bonuses. Cash bonuses, those ones are not allowed. Another one is saying, when are paid to a resident. If it is paid to a resident, the whole amount is allowed. You don't need to calculate. The whole amount will be allowed. So that is what we have talked about today. I think when we meet again next time, today we are going to stop here. When we meet again next time, I think we shall meet face to face. Then we shall continue with other parts in this course. So I think today I've sent the class video of yesterday, but I don't know. I'm seeing like a three group. I don't know which one is correct, which one is not correct. Who can clarify? I'm seeing 3 groups. on WhatsApp. So which one is correct? Which one? There is advanced taxation in UK. There is advanced taxation in November, and there is advanced taxation in Kigali. Please clarify which one is correct.
That one of UK.
Advanced taxation in UK.
Question, sir.
Yes.
No, it is advanced the Kigali 22.
Advanced taxation in Kigali 22.
Yes, the one is updated.
Is that which is okay? Okay. Then Robert is saying none of those.
Question, sir.
No, it is Chigari 22.
Kigali okay, so the communication should be passing on Kigali 22.
Yes.
Yes, of course.
Okay.
Excuse me, sir.
Yes, yes.
About attendance list. Yesterday, my name is Joseph. Yesterday, I attended the but due to the power
But
collapse.
yesterday when I was reading, let me check again the list. Yesterday when I was reading, I found there was no one was on the list. Yeah, let me open it.
22, some of us, we are not there.
Okay, let me read
Excuse
again.
me, lecturer.
Yes.
Excuse me.
Yes.
Why cash bonus is not allowed?
Because they don't relate to particular business activities.
What do you mean?
They are not related to business activities. Cash bonuses to directors.
If it's a bonus to directors,
yes? Yes, yes.
Okay. But maybe if it is linked to the performance of the business.
If it is taxed underemployment, yeah, it should have been taxed underemployment income.
So in that case, we don't need to deduct here.
Yeah, if it was taxed underemployment income, you less it. But if it was not taxed, then you don't less it.
Okay.
Yeah. Okay, you hear the list now. Mukeshimana and yes, please.
I want also to ask him about the sitting allowance.
Sitting allowance is allowed because it is taxed.
What about remuneration?
Remuneration is also allowed. If it is official remunerations, they are allowed.
Okay, thank you.
Angelique, is he around? Angelique Mukeshimana. Sylvie.
What list is not correct, doctor?
The list is not correct.
It's not correct.
There are some members who passed it in the last time.
This is the list they gave me.
It is not a list. This one is
that
not
one
correct.
is not correct.
It is not. It is not.
Okay, let's wait. I think I will get another list. Today I'm not taking attendance. Okay, I think she made a mistake. She gave me a wrong list. Okay, thank you very much. Now I'm going to send you the class of today, the Excel sheet.
Even one of yesterday.
It is on the same Excel sheet.
Okay, good. Thank you.
No,
Thank you.
Any makeup classes?
We shall plan them. Probably after next week, I will have, when we meet face to face, I will have a very good answer.
Okay.
Thank you, sir.
Okay. So, but let me ask you, in the morning on Saturday, you don't have class, isn't it?
Yes.
And on Sunday morning, you don't have class. So I think we shall plan it. Hey, Sunday you have, eh?
Yes.
In the morning?
Yes, we have in the morning the other.
In the other week?
Lesson. Yes.
Okay. So we shall discuss when, but Saturday you don't have.
All weekend is occupied. To
From
some of
morning.
us.
Oh,
Yes.
oh. Then you cannot. Okay, we shall plan. We shall see how to plan it. Okay. Okay. Have a good weekend.
Sir, share us the notes.
Then I'm going to send the Excel, but the full notes, I have to make some update. I need to make some updates and then send you the full advised notes.
Yeah. Thank you, sir.
Okay.